Hi, and welcome to this session on what's new in financial management. In this session, we'll take a closer look at the GL account revaluation, or currency code on GL, if you want. My name is Brian Nielsen. I'm a program manager with the Business Central team. And for General Ledger, it has been a top request that we put original currency code on the entries. It's been there for 5 years or more. It has probably more than 500 votes. And we've thought about it for a long time. And in this release, you will get original currency code on GL entries. You will also be able to control the posting of currencies to GL, which currencies you want to allow posting for, and then whether you want revaluation to happen on a specific GL account. And of course, we have added a batch job that will create adjustment entries to revalue a balance in GL. But let's take a little closer look at the feature. You need to turn it on in feature management. It's called Enable Use of GL Currency Revaluation. So in my company, we go to Chart of Accounts. I've created a subset. In this view, you can see that I created a new account to keep track of a loan that I'd taken in euros. And there are also some, like, I take the loan, it goes into my bank account. When I do the adjustments that you will see soon, they need to go to realized gains and losses or unrealized gains and losses, in this case, if it's a monetary asset that I keep track of. So to register the loan, we post some journal entries. I've already created those. So to register the transaction, I have these two lines. I get my loan in two parts. I posted beginning of January. I picked the currency rate, currency code, which is euro, and I posted to my bank. You can see that I get a small part, 10,000, that gets converted into 15,000 in local currency, US dollar. And I just post to the bank. So let's just post this. And we can go back to our chart of accounts. And you can see that I have a liability of 150,000 in US dollars. But I've taken the loan in euros. At the end of February, for example, when I do want to create a financial statement, the exchange rate has changed slightly. And I want that to be reflected in this liabilities account. Before, I would have to keep track of it in a spreadsheet, do some journal entries, post them to make these adjustments. That was cumbersome. Now we've given you a help in creating those entries. In this case, we will pick a journal so we can hold the adjustments. End of February, we'll just focus on this account. We don't have to worry about currencies in this scenario. We only posted one currency. And we get an adjustment. So let's quickly take a look at that adjustment. We have one adjustment. I'll just show you. Currencies, and we're picking at euro. We're picking the rates. And end of February, the rate has gone from 1.5 to 1.4. So we are experiencing a gain here because we owe less on this loan. So we expect that to be reflected in this journal posting. So we are good. It has the information and we'll just post it. No need to make adjustments in this case. And we can see it immediately when you post it. The loan is now 140,000, reflecting the fact that the exchange rate has gone down a bit, and the adjustment has been posted just as I specified in the setup, that it goes to unrealized gains. And I can continue that. If we look at the entries here, you can see that this is the entry. I made a mistake, so I had to reverse it. But there's only one entry for adjustment because we adjust the balance per currency. It's not adjustment for each of the entries. So in the second scenario, we'll look at the setup, and The setup will allow us to post to multiple currencies to the same GL account, and you can still do revaluation. And we'll just take a look at what is the output of that, and then we can dig into what are the differences between this and the normal currency exchange rate adjustments. But let's dig a little deeper into the scenario. So we are back to the loan, was posted in January, adjusted in February on this account. But if we go into the account, you can see at the Fast tab here that I have selected multiple currencies. That means that I will allow multiple currency transactions to be posted to this account. And that's of course for demo purposes. I would probably recommend that you always pick same currency and then you pick a currency in the currency code field. If you have set it up to have multiple currencies, you can go to the related table, source currencies, and in there you can just specify which other or which multiple currencies will you allow. In this case, I also allowed Canadian dollars. I can also select that I will only allow local currency, so I don't get any transaction. It's just an option that I have. And I can select to have blank, which means that any currency goes, just standard business central behavior. I can toggle this parameter, and tell the system that I want revaluation to happen for this GL account. And when it happens, I want the adjustment entries to post to the unrealized gains and losses account. That is set up on the currency, but I want, like, they are both unrealized and realized gains and losses account. In this case, I picked the unrealized because it's a monetary asset that I'm tracking. So that's the setup, and basically all you need to know about revaluation. In this case, we allowed multiple currencies, so let's post multiple currencies. So I've taken a new loan, this time in Canadian dollars. I post to the same account because I set it up to allow multiple currencies to be posted to it. I pick Canadian dollars. I have some amounts. In this case, I will also do it as a two-part transaction, a small part and a little bigger part. I post to my bank account. The rates for Canadian dollars, they go in the opposite direction of euros. Euros was going down, so I get gains. Canadian dollars go a little up, as you can see here. They go from 100 to 80 to 100 to 85 and 90 in March. So they go in opposite directions. So we are expecting gains to be posted to euros or for euros and losses to be posted for Canadian dollars. But let's just post this transaction. It's in January, just so we have some nice numbers. And we can go back to our chart of accounts. And we look at this subset. So now we posted a loan in euro and a loan in Canadian dollars. We adjusted the euro loan, but we didn't adjust the Canadian dollar loan. It's still here. We have the loan here. If I click here and search for the entries, you can see that after I posted the gains and losses for the euro loan, I only posted the transaction. So we need to make the same adjustment for Canadian dollars to this account. And same as before, you just run the batch job. You pick a journal and you pick the account. You could pick Canadian dollars, but since the balance for euros is already adjusted, nothing will happen if you also include Canadian dollars, so we'll just leave it blank. And we'll get one line in our journal. So let's take a look at that. So we have an adjustment. It is just for the Canadian dollars, and it went from 100 to 80 to 100 to 85. So we'll have a small loss of 5,000 for Canadian dollars here. And we'll just post it. And then we'll go back to chart of accounts. And you can see the adjustment has been made, and it has been posted to the losses account. So you can have multiple currencies. We will post an adjustment for each of the currencies that are posted to in a GL account. And you'll be able to set it up per account. You'll be able to control the currencies. You'll be able to control if revaluation is going to happen. And of course, in this case, we only selected this account. It wouldn't make any sense to allow GL revaluation for bank accounts, because revaluation is done for bank accounts for customers and vendors. So the same goes with your account payables and account receivables accounts. You don't do adjustments for those because you have the standard currency exchange rate batch job to do that balance. The difference is important to understand. We make one adjustment per currency for the balance in that GL account. When you're running adjustments for customers and vendors, you are doing it per customer and vendor, and even with the new one, the new batch job that you can turn on in feature management. Let's just take a brief look at that. Go to currencies, and in here, from here, you can run the job. This is a separate job that is done for customers, vendors, and now also employees and bank accounts, but they will do it per customer and vendor. For bank accounts, we are still adjusting the balance. You can now adjust per entry. So it's not just per customer or per vendor, but it's per each of these customer and vendor ledger entries. For the GL revaluation, it is just an adjustment per balance per currency. So there's a difference there. So when you start using this new feature with GL revaluation, you need to think about, does that meet your reporting requirement? If you need to keep track of very detailed adjustments to each transaction, I would recommend that you use customers and vendors for that, like a customer or a vendor account to do that. If you just need to keep track of the full balance, you can use GL revaluation. So with that, I want to thank you for watching this session. If you have feedback, go to BC Ideas and submit ideas or vote for some of the existing ideas. This new feature came from BC Ideas. We already had it in the backlog, but the votes we got there, which is more than 500, came from BC Ideas and was the one that triggered us to add it to this release. Thank you for joining the session.